Hello traders, welcome back to Forex Market Pulse. In today's gold weekly forecast, first we will analyze the higher time frame daily chart to understand the overall market direction, and then later we will move into the 4-hour time frame for short-term trading opportunities and key levels to watch this week. And honestly, this week could become one of the most volatile weeks for gold traders because we have major macroeconomic catalysts ahead, including the FOMC meeting, Fed funds rate decision, and ongoing geopolitical tensions between Iran and the United States. Right now, gold is trying to hold support after a massive bearish breakdown, but the market structure still remains weak overall. So the big question is, will gold recover from current demand zones, or are we preparing for another massive crash toward the 4,000 psychological level? Let's break everything down step by step. So first, let's start with the daily time frame. As you can clearly see on the chart, gold is still respecting a massive bearish structure after failing to sustain above the previous all-time highs. Price created a strong rejection from the premium zones around 5,000 to 5,200, and after that, sellers completely took control of the market. Now, if you carefully watch the daily structure, gold is continuously making lower highs and lower lows. Every bullish retracement is getting sold aggressively from supply zones. That tells us institutional sellers are still active in the market. At the moment, price is trading near the 4,220 support area after reacting from the lower demand zone. This area is extremely important because buyers are trying to defend this level to avoid another major breakdown. But overall momentum still remains bearish. And another important thing on the daily chart is this entire supply zone sitting above current price. You can clearly see multiple untouched bearish zones between 4,450, 4,740, 5,000, and all the way toward 5,200. So even if gold starts retracing upward, buyers still need to reclaim these zones before we can talk about a full bullish reversal. Now, currently I see two major scenarios on the daily time frame. 4-hour time frame analysis. Now let's move into the 4-hour time frame for more precise intraday structure. This chart is giving a very clean bearish continuation setup. You can clearly see gold recently created another lower low after the massive impulsive sell-off. After that move, price reacted from the demand zone near 4050, and now we are seeing a short-term bullish retracement. But honestly, this still looks more like a corrective move rather than a full trend reversal. Right now, the market is trading inside a temporary recovery phase while remaining under major resistance. And the most important thing here is the imbalance zone sitting around 4220 to 4250. This zone is acting as short-term resistance. If price gets rejected from this area again, sellers can step back into the market and continue pushing gold lower. That's why for next week, these are the key levels I'm personally watching. Bullish setup. If 4-hour candles manage to close strongly above 4220 and sustain above that area, then we can see a short squeeze toward 4300, 4450, and possibly higher retracement zones. But buyers still need confirmation because the higher time frame trend is still bearish. Bearish setup. If price loses current support and breaks back below the demand zone near 4050, then sellers will likely target 4000, 3950, and potentially the 3880 zone. And honestly, looking at current structure, sellers still have control unless buyers reclaim key resistance areas. Fundamental and macro analysis. Now, let's quickly talk about the fundamental and macroeconomic side, because this week fundamentals will be extremely important for gold. The biggest event ahead is the upcoming FOMC meeting and Fed funds rate decision. Right now, markets are expecting the Federal Reserve to maintain a hawkish tone because inflation pressures are still elevated and recent U.S. labor market data remains relatively strong. That is supporting the U.S. dollar and keeping pressure on gold prices. At the same time, geopolitical tensions between Iran and the United States are creating uncertainty across global markets. Whenever geopolitical tensions increase, gold usually receives safe haven demand. But the problem right now is that a stronger dollar and higher treasury yields are limiting bullish momentum in gold. So gold is currently stuck between two major forces: safe haven demand from geopolitical risks, and bearish pressure from strong dollar expectations and Fed policy. That's why this week's FOMC statement, Powell's speech, and interest rate outlook will be extremely important. If the Fed sounds more hawkish than expected, gold can continue selling aggressively. But if the Fed hints toward future rate cuts or weaker economic outlook, then gold can recover sharply from current demand zones. So expect very high volatility this week. So overall, traders, higher time frame structure on gold still remains bearish. Daily and 4-hour charts are both showing weak momentum, lower highs, and continuous rejection from premium supply zones. Right now, the key support area remains around 4050 to 4000. If that level breaks, then gold can continue crashing toward 3880 and even lower liquidity zones. But if buyers reclaim 4220 and start closing above 4450 with strong momentum, then we can finally see a deeper bullish retracement. So trade safe this week, especially around FOMC and major news events, because volatility will be extremely high. Wait for confirmations, manage your risk properly, and don't chase emotional entries. If you enjoyed this analysis, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss the next Gold Weekly forecast and live market updates. And comment below, do you think gold will recover after FOMC, or is the bigger crash still ahead? I'll see you guys in the next analysis.